After 60 years leading Berkshire Hathaway, legendary investor Warren Buffett has announced he is retiring. Now, he will stay on as chairman of the company, but Canadian-born Greg Abel will take over as CEO early next year. Let's go to David Dietze on this, chief investment strategist at Dietze Wealth Management. David, how would Warren Buffett's influence at Berkshire change when he transitions to the role of chairman?
Well, that's a great question. First of all, it's not going to happen until the end of the year. And then he will remain, of course, as chairman. Plus, of course, he's the largest individual shareholder. So my guess is there's going to be less changing than it first meets the eye. Remember also, Greg Abel has been well nurtured by Berkshire and Warren Hathaway. They've had a relationship now for over 2 decades. But Abel is best known as a manager. He's gotten into the weeds with all these various subsidiaries. He's not thought of as a stock picker. In fact, Buffett had hired 2 other fellows, Coombs and Wexler, to be his stock pickers. So, certainly there is a vacuum there for Buffett to continue to have a role as chief stock picker for Berkshire Hathaway, even when he's no longer CEO.
Okay, so when Abel takes charge, I'm wondering if you expect to see much change from him. Sometimes when you have a new leader, they want to make their own mark on the company.
Yeah, certainly. But we have seen Abel pretty much not have a big profile. I think if there's any change, it'd be to be less active than even Mr. Buffett has been in recent years. When you look at the key questions here, what do they do with that cash hoard? Do they pay a dividend? Do they make a large acquisition? Do they break up? Those are such fundamental changes. I don't see Greg doing that without the approving stamp of Mr. Buffett, as long as he can indicate what his thinking is. So I think it's going to be more business as usual. If anything, I would say this is less news than the media is making out to be. I think it's classic Warren Buffett, classic governance, where they're planning ahead for the inevitable day instead of having a sudden disaster or illness or something. They've planned ahead. It's beautiful, beautiful situation here.
So he'll sail off into the sunset is his beautiful time. Investors don't seem happy about it. Obviously, Buffett is the man that they like leading that company. Do you think that Abel will be able to win them over?
Certainly, you got 3 things working against the stock right now. First of all, there are those who, if Buffett's not the key man, that was the reason for owning the stock, there's some selling pressure here. Second, of course, is that they also announced earnings over the weekend, and quite frankly, the earnings weren't stellar. Operating earnings were down about 14%. The other thing, of course, is of all the large caps, Berkshire Hathaway has done as well as any of them, and so they've gotten into a bit of at the high end of the range, as it were, in terms of their valuation relative to book value. So I think it's a good reason for some people to say, hey, what do we got here? We got a stock that's trading at a big premium to book value versus traditionally. Maybe this is the time to ring the register a little bit and take down our position.
Let's talk about whether or not you think Abel will be able to deliver what Warren Buffett has, 20% annualized returns, 6 decades. Wondering if you think other funds have a chance to catch up here.
Well, so I think Warren Buffett would tell you that he himself at Berkshire Hathaway couldn't match the returns they got in the early years. They're just plain too big. And so to make the acquisitions that they made their fortune on earlier has gotten more and more difficult because their set of opportunities is narrower and narrower. And of course, it doesn't help the fact that we've got a market that's trading certainly at the high end of historical range. It's not a cheap market. And of course, Warren Buffett always looks for that opportunity. That's why he's accumulated all this cash. There's not much to do. So I think it will be difficult in the current market environment for Greg Abel to duplicate that. The other thing where we historically give Warren Buffett the edge is if there is a catastrophe, who knows, where all of a sudden the market dives and there's a kind of a crisis atmosphere. That's where Warren Buffett had really cut his teeth to be able to move in, like, for example, during the great financial crisis, take stakes in GE, take stakes in Goldman Sachs. In a generation before that, take a stake in Solomon. I'm not sure Greg Abel has the investment instincts to be able to move that rapidly. On the other hand, Warren Buffett's going to be by his side as chairman, so maybe all will still be good for them potentially taking advantage of an opportunity.
Let me ask you about the Fed rate decision, which is coming up. I'm wondering what you're watching to try and determine what's going to happen.
Well, I think the betting odds is only a 3% chance of any formal change in monetary policy. We'll be looking for any kind of comments surrounding it and so forth to see where they're leaning. But, the fact of the matter is there's no reason to do anything. They have a twin mandate. One is unemployment. Well, we just heard from the April jobs report that the jobs came in better than expected. I think 177,000. So what's the problem with jobs right now? There may be a problem up ahead, but so far we haven't seen it. In terms of inflation, of course, we're not back down to that 2% level. So there's no reason to say, hey, we're done with fighting inflation. We can relax things. On the other hand, of course, he's getting tremendous political pressure from Mr. Trump. Mr. Trump says he's not going to fire him, but he still wants him to lower interest rates. And of course, you got this Kevin Warsh, a former governor of the Federal Reserve, knows his stuff, may be the new person after Powell's term expires, who's also saying that there's major problems with the way the Fed is approaching things. So he's under pressure to ultimately relax monetary policy. I just don't think they're going to do it right now. All
right. We also have our prime minister going to meet with the American president. I'm wondering if you see that as a sign that perhaps they could work out some of the initial trade concerns and some of the uncertainty could be evaporating from what we've seen so far.
Well, we're hopeful now. I mean, since Liberation Day, as it were, because of relaxations and postponement of many of these tariffs, of course, we've seen the market retake all of its losses since April 2nd. We are on standby to see if there's some progress in some key countries other than China, of course, to see whether there is agreements reached, which could serve as a model for other deals. I think the fact that, for example, Sunoco is teaming up with Parkland suggests that Sunoco and many smart money running businesses don't think the trade situation is going to worsen. If it doesn't worsen, I think it's going to get better. So I'm cautiously optimistic there.
Okay, so you like the Sunoco offer. What do you think of it?
Yeah, I do. I mean, it's going to create solid economies of scale for, the vending of motor fuels. They have complementary territories and so forth. They'll be able to reduce costs and so forth. And I really like the fact that Sunoco wouldn't be making that move if they thought a huge, as it were, wall was going to be erected between Canada and the United States. So I think that says that the smart money sees Trump ultimately relaxing some of his initial positions, and things will get better before long.
All right, David Dietze, I do have to leave it there, sir. David is the chief investment strategist at Dietze Wealth Management Group.